Welcome back. We're speaking with John Kaiser. John, why is the price of Eskay mining sagging just as the Golden Triangle drilling season in BC is about to begin?
Jim, I think the main reason is that the market has gone cool on the resource sector. It seems that this year we have the sell in May and go away syndrome, where you come back in late August, September, when results start to flow. Eskay mining hasn't had anything new to report, since the final assays were reported in the first quarter of this year, and they are expected to start drilling a 35,000 meter program, early July, and visuals probably won't be available until late July, early August, and assays probably not until September. So the market is asking itself, what's going to change? Maybe we can buy it back later. If this whole market is turning so negative, let's just sell our stock and go away for a while and buy it back cheaper. Except they are going to be in for a very big surprise, because in June, Eskay Mining initiated a SkyTem geophysical survey that will pick up EM conductors on the entire property and at 25-meter spacing. And this will accomplish two things. One, it will focus where they need to be drilling in the vicinity of the TV and Jeff targets, where they got excellent gold-silver intersections last year. But it will also reveal where else on the property there are EM conductors that have never been looked at. And the reason I'm pretty excited about this prospect is when John DeDecker took on a complete rethink of the geology of the project, he realized that this entire basin, which used to be flat-lying, has undergone at least 3 folds and thrust faulting, so that there are now 3 anticlines on the property. And the main one is the middle one that also ultimately connects to the northern end of this 30-kilometer formation where the 21B zone was mined out, and where Skeena is now developing a gold resource within the rock surrounding the original VMS lens. Now, what's also interesting is that John DeDecker's work, based on the drilling they did last year, made him realize that there were at least 5 mineralizing events where the basin was there. It's a back arc basin. You have the sort of islands moved in from the ocean, and it's created an inland sea, and it was hydrothermically active, and you had 5 different distinct periods where these fluids came up, harvested metals, and then they would get close to the sea within a couple hundred meters, and a lot of times that generates exhalative deposits, which where you've seen the smoker systems, these hot metal-rich fluids being spewed into the ocean and settling down. And the 21B zone is a variation of that, except it's more of a debris flow. But apparently, most VMS deposits, and the very big ones, are what they call more replacement-style zones, where the metals drop out in the sort of stringer feeder zone beneath the ocean surface. When they manage to be smoked into the water, the SEDEX kind that makes those big zinc, lead, silver deposits, those end up being created in this way. But the VMS ones, the richest and best ones, end up in that little area 200 meters beneath the surface. So as he's figured out the architecture of the geology, what it was like originally, 5 distinct mineralizing periods, then the folding and the thrusting, this has now given him a framework to interpret geophysical conductors and design programs. And they've also done a BLEG study which highlighted in the east anticline an area where no work has ever been done, and it shows being elevated in gold. And also at the southern end in the GFG area, this has lit up in a way that isn't explained by any work that has done before. So we hope to see within the next few weeks an update from Eskay Mining on what the SkyTem survey revealed how many areas of interesting targets. And the key thing is, one of the things John DeDecker said, I said, I asked him, could you find a 10 million ton version of the 21B zone? He said, well, it doesn't seem like that sort of size potential is there. That 2 to 3 million ton range is probably the limit. But when you look at the geological context he has developed, we're talking about an entire district of these silver gold enriched deposits. They may only be 1 to 3 million tons each, but if you end up with a dozen of these at all these different horizons, some may be close to the surface where drilling hasn't happened before, others as underground mineable targets, you have the beginning of what could be an extraordinary new discovery that isn't just 1 or 2 high-grade zones, but is an entire district of zones all associated with these 3 major folds that have wrinkled the stratigraphy, and where there is evidence now that these hydrothermal systems came through at 5 different periods. So I think when the market hears all of this in a couple of weeks and realizes, wow, this is going to be a multi-year play, then they'll say this $400 million valuation that we have now, which is ahead of the game if you're looking for only one 21B zone, and if you haven't found it yet, it's a little bit expensive, but it's the potential to develop an entire district, maybe with multiple 21B zones, and lots of smaller, lower grade versions that are still worth developing. That's the story that I think will captivate the market and make the Eskay mining play probably the star for the Golden Triangle this year.